45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. I just decided to I'm out of town actually this week, so I just thought I would come out and actually show you folks a little bit about what's going on from the standpoint of Bitcoin, a couple things, catch up. We haven't been online for a while. I think it was November 8th, last time I did a YouTube. Let's get into today's video. Hey, I thought I'd just come live. I'm actually out of town right now, just dealing with some big life stuff. So I just thought I'd come up. I know I miss being online with you folks. And anyway, Daniel, I don't know what I'd do if you were second. So anyway, thanks for showing up. Lots going on in the world for sure. After the election, we saw quite a bit of, rally, and then we saw a little consolidation here and a lot of things going on. So I made this video about Bitcoin. So I do want to basically cover Bitcoin. We'll let the room fill up a little bit here. And I know this was like total random out of nowhere, but we'll see how many folks come out and do this. There's a couple other things that before we get in, just while the room is filling up, I do have a Black Friday special. It goes in line with TradingView. Every year you can get TradingView like crazy cheap at this time of year. I think their Black Friday sale starts next Friday, which is Black Friday, right? So I'm going to go ahead and launch this. If you want the indicators, this is a good time. If you haven't already got them, you can go to kendallreport.com/indicators, and the code is Kendall20, and that will get you right at just short of $100 off of the indicators. So you can get them in there. I think it's $357 or something like that. Also, I'm about to announce a 2-day class, and if you buy these indicators now, I'm going to have a special for you. So I'm going to do 2 days, 2 hours with a 1-hour Q&A. Then we're going to do a mastermind for a couple hours with just Q&A. And there's going to be a private Discord that I'm putting together just for folks that come to this symposium. And the symposium is going to be focused on how to set up trades. It's going to be narrowly focused. Last year we did one. I attempted to do this broad-based, let's go through everything. It was too much. Okay, so we're going to narrow this in, and we're going to do that. So we'll be announcing that. So I'll put some stuff in the description once this video is done today. I'll probably hang on for a little bit just to do some things. I did let the folks over in Discord. So you also get in our private Discord if you buy the indicators as well. And unfortunately, I've just got a lot of personal things going on right now that have to be dealt with. I'm actually, like I said, I'm out of town right now, so there's an Airbnb behind me where I'm staying. So anyway, I just thought I would come up and talk about this. So let's go ahead and let's take a look and start to look at some of this stuff that's out here, and let's talk Bitcoin for a little bit, because I think there's some things here that are going on. It's been a really interesting pattern that we've seen unfold. The algos have been spot on this. This is, I talked about this a few Substacks ago. The other thing is, if you don't get my Substack, that's the only thing I'm doing all the microanalysis on right now. So it's $8 a month. You can get it for, if you do a year, I think it's like $6.50 a month, something like that. It's $80 for a whole year. But and that comes out daily, by the way. So there's a lot of numbers here. But one of the things that I've been talking about here is kind of this dragon head formation that is set up here. I'll just draw in a couple of things while we continue to see the room fill up. And I think that the interesting part of what's going on, at least with Bitcoin, is you can see this angle of attack that's being projected here, and it's very, I mean, this is substantial, but this is the where I just put this circle, that is the dragon head. And I'll draw a couple things in here just so you can see this. And typically when you get these little dragon head patterns, they resolve themselves to the upside. The augos, you can see, I'm just drawing a bunch of stuff here. The red dots are projecting to stay above the 10-period moving average. And I'll show you, I just put out here, I think on the headline is 106 is a minimum target on Bitcoin right now. So let's clean this up. Yeah, so this is roughly 106 coming in. The algos are all pointing there on a daily basis. So let's take a look and go over to a weekly chart and just take a look at what's going on there, because I think there's some things here that are really interesting. And a lot of times I talk to you folks about on the indicators. This is the fib target, the WaveTech fib target tool. Even though this thing is kind of outdated, I'm going to show you some other numbers here, but we're looking at the potential here for this pattern to be completed. And I'm going to draw in where this came from, and you'll see exactly what I'm talking about here. So, you know, this pattern here is where these numbers came from. So this Fibonacci projection, even though we went sideways, this is a weekly chart. So this goes back to the halving event over here. And then we went completely sideways for months. And how classic is that? I've got somebody right outside my window with the air blower. Landscaping people showed up, so I apologize if you're hearing that. But this pattern here is still in line with what's going on here. I'm going to put you on hold 1 second. Well, I will say this, the owner for the Airbnb keeps it up good. So if it gets too crazy, I guess I'll have to bail out of this thing. Give me okay, you can't hear. Okay, that's good. So hopefully he doesn't get too close, but it's pretty annoying on my side. Anyway, so all of this pattern that I'm showing you here, the weekly is showing that it's going to stall here. So around this 106 level should be where we end up at. So hang on one second. So let me know if you guys hear anything, okay? It's super annoying on my side here, but anyway, let's go on. Yeah, so the pattern, like I said, is set in here. Let's take a look at the algos. And you can see algos, everything's peaking out here. So this is probably going to be about the whole pattern that we're going to see here. We should go sideways, just pretty much like what the algos are showing us that we're going to do. This is a likely pattern here that we're going to see. So anyway, let's go to a monthly. I don't think there's enough data here to really get a good number here. All right, folks, hang on. All right, folks. It's pretty noisy here. It's pretty classic that I'm in a random environment and got all that going. But anyway, yeah, he's actually doing the hedges. Anyway, so yeah, let's go through the S&P here real quick, just so we can get some ideas here on what's going on. It's like having this crazy buzzing. So let me know if you hear it, because it's like really loud in here. Okay, so this was interesting. If you have not had the Substack, if we go over and take a look at Substack, there's a couple of things I've been talking about on Substack. And, folks, you hear a lot of chatter around the planet talking about we're going to get a big correction. Of course, you've been hearing that for 2 years, right? The better part of 2 years. About a year ago, we started this rally, and I've been putting this chart in the Substack a couple of times here because I want you to realize that this was advances in the markets without a 20%. Okay, thanks, Kyle. Appreciate it. This is like a 20%, no 20% corrections. 1987 to 2000, 582% return. 2009 to 2020, 400. Here's another one right here. This is when I started in the markets shortly afterwards. 82 to 87 was 229. So the reason why I keep kind of harping on this is that folks, we've been in this cycle where we get like a year on, a year, and then it goes up 1 year, down the next, up the next year. Now what we've had back-to-back returns of double digits, and it doesn't look like they're going to give this thing up in the next 4 weeks, but anything's certainly possible. The probabilities are there. But the reason why I keep bringing this up is that these rallies can extend, and one of the things that I'm going to be talking about here, let's see if I can come on screen for a second here. One of the things I'm going to be talking about in my annual update that I do is actually that it's impossible to think. I'm sorry. There's 2 guys out there now. Okay. All right. Unbelievable. Okay. But yeah, so the reason why I bring this up is these rallies will extend, and they can continue to go for multiple years. And I think that the annual report I'm going to put out is going to be, that we're entering into a super cycle. And this is, this is going to be, I think, a very interesting time. I've got my AI hat on. I believe in AI big time, and I think we're going to see things go on. So that's why I keep showing you these rallies here. I wish I could think with all the buzzing in my head. This is pretty amazing. Let's see if we can get through this thing. Hang on one sec. Hang in there, folks. Just 1 second. Thanks for your patience. I'm sorry, what a disaster. Not able to get in any kind of flow. They're right outside my window right now. So, yeah, I'm not, let's see if I can at least get my head into a couple things here that somebody's asking about here, and just see if I can get some things going here. What is it? MSTR. Don't know anything about it. Yeah, so big spike. I don't know anything about this company. I can look at it technically. Looks like this spike looks like it's climactic in nature. Reminds me of like looks like Bitcoin. Big, but the algos are starting to. You can see all the indicators are starting to project loss of momentum. The fact that it's losing momentum, this is what we saw on Bitcoin, is that even though momentum's being lost, we're looking at, these are crazy numbers, 11.27. Typically a 0.25 is a trend, and we're just seeing this thing continue to, this is like a monster deal. Yeah, so somebody's asking, why wouldn't we see some targets on 6M and 12M? I don't know what that, Gilly, I don't know what that question is that you have there. Okay, they hold a lot of BTC. It makes sense. That's what it looks like. Yeah, so, and it looks just like the chart. So that's interesting that I picked up that pattern. Oh, that's Michael Saylor's company. Okay, yeah, all right. I got it. Yeah, so they've got this spike, and so it should look just like Bitcoin, because that's what I was seeing. That was interesting that's happening, but anyway, yeah, they're coming again. Yeah, folks, this is embarrassing. Of course, I'm not in my environment, so hang on one sec. Put some stuff in the chat line that I can cover, and I'll come back up here in a minute. They're right outside the window. Yeah, so I'm not sure as far as this goes. This looks pretty climactic, and I think this rally in Bitcoin is going to resolve itself the same way, is that it's going to go in the sideways range, and we're likely to see things stay on the downside for a while here. Downside meaning going sideways. You're obviously pretty good chance of getting RXT. Yeah, I just sent a text to the owner of the Airbnb, by the way. Yeah, it's like I basically told him I'm trying to have a business meeting. These guys, you got landscapers during the day. And I'm down here because of my wife's health. Thank God she's not here trying. I'd be out there screaming if she was here at the moment. But anyway, yeah, so, but all the Bitcoin, let me just pop up a couple of charts here. Bitcoin is going to not look as dramatic as this. You see it's staying within the confines of the market grid, but everything's starting to forecast down. Momentum's literally, it's forecasting for it to go negative. This doesn't really have a lot of relevance, but we should see it starting to flatten out quite a bit. Let's see here. Yeah, let's take a look. Where are we at? Are we? Yeah, this is pretty bad. Sorry for the landscaping, guys. Like I said, I'm at Airbnb. Probably not going to get a good review on this one. Okay, this is pretty ridiculous, folks. I think I'm going to delete this when I'm done. And there's no way I'm going to leave this up with all this crazy distraction. So yeah, let's take a look at. Let's go ahead and go to ES. Yeah, I think the 106 level, I think there's still enough enthusiasm on Bitcoin for it to go, continue higher. The momentum is huge here. But I went over to the S&P now, so let's try to. S&P is also kind of hitting peaks on a weekly basis, and we did see really just a sideways range. So all we've managed to do, if I go over to the daily on the on this, is we've been bouncing off the 40. I talked about that on the Substack. Today we bounced off the 21. If you look at 21, it actually crossed back above its second derivative. So we're getting a lot of upside here. Yeah, Gilly, I still don't know what you're talking. 6M, 12M, not showing anything ever. I don't know what you're talking about. Can you rewrite that whole question? I'll try to answer it. So you guys hearing the buzzing? All right, it's just getting crazier and crazier. Okay. Folks, I can't work in this condition. I'll tell you what, I'm not going to, I'll try to do something maybe on Sunday. Yeah, it's not bad. I'm glad it's not real loud off the mic, but it is impossible to concentrate. I mean, it's just like trying to overcome the ambiance that I'm in is like ridiculous. But you can see here with the way the algos and everything look. I already contact the owner, and they hopefully if they get done with the blowers, it'll be fine, right? But they might already be done, so maybe that's good. Making a smoothie. That's funny. All right. So Gilly, what are you talking about here on the 6 month and 12 month? Okay. Gotcha. Now I get the M. Sorry. I was just trying to overcome all this background noise here. So it's quiet at the moment. So we'll go on. I only have about another 20 minutes or so. But bottom line is what we're seeing here on the futures on the S&P. Okay, now they started a lawnmower. It's pretty funny. All right, I'm not going to win here. Yeah, they're doing the lawn. They're mowing the lawn now. Yeah, I'll take a look at some of this stuff. Just give me some stuff to look at, and we'll do that. There's no way I'm leaving this video up. So, CleanSpark, take a look at this. Algos have been going back to, this is a daily, a couple days ago, have been indicating some loss of momentum. Probably the 40-day moving average is going to be where you're likely to end up here. You're looking at 1165 is maybe support here. Maybe it holds right around here. Typically, let me blow this up. I'll show you. This is a pattern that I'm constantly showing you folks a lot about, that I think is interesting. Let me turn off the red dots here. So one of the things that I talk a lot about, let's see if I can get this to draw in here. And let me clean this up. So a pattern like this is interesting in that when you get these kind of peak, we got an RTX sell up here, so that told us 1 to 2 days down, and actually sometimes those will end up to be a top. There was another one kind of right here where my cursor is right here, and we came down in, and then from on this stock here, we've got, we're coming down all the way into these patterns. So if we look at the PPMs real quick, PPM 1 is still positive 0.27, PPM 3 0.78. So you have it. They look flat, but these are pretty robust numbers. And PPM 1 is actually turned negative. It's rolling down. So what typically will happen in here is this pattern here will emerge. You've got a declining 10-period moving average and this rising 40, and you'll end up trading within the confines of this, and then we get into this little wedge, but the wedge is being drawn by the markets, otherwise by the moving averages, and then we'll find out which way we're going to go, and possibly we can go to the next time series and figure that out. So we can, so that hopefully that's helpful. Let's do this. Let me take this off, and let's see if we can go to. Let's see if we can go to a weekly real quick on this. Just see what's out there. Okay, yeah, this actually makes some sense. So on a weekly mode, there's not enough data to calculate the algos here. But you can see within the market grid, we actually got up to a fib target 1, which was, let me see if I can get these numbers off real quick. Yeah, 1445, we reached up to fib target 2, which was 1690, had a high of 1580. Let me get the high. Had a high of 1797, so we spiked just above it, almost. Actually, we may have actually hit the fib target 3. Yeah, 1841 had a high of 1797. So pretty close to fib 3, and we got a rejection off of there and coming back into the pattern here. So this is definitely one of these stocks you want to trade the ranges, and you can get probably get some action here that will give us some good insights on what the range is going to be. And it looks like this stock, for the most part, likes to get in a range bound, get a little burst. There was probably, it looked like right after earnings, it got a pop. You got earnings coming up in a few weeks again here. But yeah, so this is probably going to stay within the confines. So I don't know if you have the indicators, I would just use the weekly. That should give you some pretty good numbers, because you're looking at support 2 right now. We're getting close to 1204. We got a low of 1260. That should be probably that range there. You also have a 10-period moving average in there, all that. So let's do Tesla. Yeah, let's just do some stocks real quick here. Tesla, it was interesting because the Tesla back on September 16th, we got a upward projections for Tesla, and the first one was move up to 282, and then we're looking at actually 285, 325, and 349. So we managed to get just above here at on this range last week. This is a weekly Tesla. We got up to 358, so we got right into that target zone of that 349. So we went just above it, a little rejection. We're just kind of consolidating here. You can see the algos are suggesting we're going to see some downside on here. So yeah, here comes. I'm hoping they're done here pretty quick, folks. So let's go to a daily Tesla, see if we can fine tune this just a little bit. Well, you can see I'm actually in Phoenix. That's why they're doing the lawns here. Okay, so that's what's keeping things going here. So, looking at daily, we're about to break through the second derivatives on PPM1, which suggests that we're going to take out the 10-period moving average. That is right now 332 is that mark. If we get below there, we also have some downward fib targets that are showing up as well. Those are 323, 310, 302. So everything's kind of pointing down toward coming to this 21-day moving average. That's right at the 296, but it's rising. So we'll probably see market come into that range. You can see the PPMs and the algos, the projections, the dotted lines are the projections of what these indicators are going to do. And the only way this is going, what it's telling us is that we're going to get below the 10-period moving average and probably get into, let me bring that up, because this is that wedge again, folks. I'm telling you, if you're trading, doing options, you're doing those type of things, you can really zero in on a lot of these trades, especially if you can straddle these prices. But what the PPMs are suggesting, that we're going to come into this range here, and this is probably this rising 21. This is the wedge where prices should come into, and then next we'll be able to figure out whether they're going to break down or not. One second. So yeah, so we should come back into this wedge. What we'll see also is that the market grid might form a little downward channel here, and we'll probably get some action down in here, but ultimately getting into this little wedge. And if things weaken, we could expand this wedge. So for me, when I'm looking at these charts and trying to figure out what's going to happen in here, if we start to see that we get below all of this stuff, we get this downward channel, and this will move us down like this towards this 21. Ultimately, I'll bring up the PPMs in a minute. If the PPMs are starting to roll over, then you could get into the next level. So I'll change colors here so we can just get an idea. Then your next pattern to watch would be the bigger wedge, right? Let me just clean this out. So this would be your next wedge, and prices would come down. I suspect they'll come down into here, but we could see it ultimately, because this is rising. This is coming into mid-September. This is a daily chart. So we could see, you know, really a broadband consolidation in here, but moving somewhat lower as markets react. So let's go back and take a look and see if there's anything we can pick up from the indicators themselves, and see if there's any potential. So yeah, you can see everything's starting to fade here. So we got the big blast. You know, just so you know here, folks, I'll come back up for a second. One of the funny things, I laugh every time I see it. People are going, well, there's a gap down there, has to be filled. Gaps do not have to be filled. There are thousands and thousands of gaps that aren't filled. That's just a silly thing that, like, you're going to get short up here and expect it to drop down into this gap. Maybe it does, but you know, there's plenty of gaps that have never ever be filled and never will be filled. Especially when you're talking about individual stocks, there's a tendency that rule may work better with indexes, but even because indexes don't gap that often. They didn't used to, they do anymore because we get these big openings. But there used to be a time when to get a gap on, you know, I've been around for a long time. Back in the day, it was almost impossible for a gap to show up and on an index chart, right? Because the way they were calculated, it was pretty much the close. It would kind of start at the same level. Now we get this massive block of orders and a lot of stocks open. The other thing that used to happen that doesn't happen anymore, if you have to be around for a while, because it used to be where stocks would get delayed on openings, and the open would be delayed, and they say, oh, there's an imbalance of orders, even sell or buy, and they'd have to negotiate all of those prices with the specialists and the humans that were on the trading floor back in the day, and they'd get it all. And sometimes stocks would open, you know, an hour, 2 hours, it could be 3 hours late in the day, and that would happen quite often, actually. Now I believe 99.9% of every stock opens within nanoseconds of the open, because now you have a digital process and everything happens right away. So you don't get those same type of things that you used to get before. I think they finally finished the job. So about right, 20 minutes, right? Okay. So, but when we look at stock and with gaps on stocks, they're going to happen, especially around earnings and things like that. They don't need to be filled. They oftentimes will be, but it's I wouldn't put a lot on that. There's a lot of indications that the stocks can come down and fill a gap, or go up and fill a gap if it's a gap down before, not just because the gap's there, because there's other elements and things that are happening on there. Gary's got a good question here. Let's go. I haven't. Let's go to the Russell here. This is daily. Russell is getting it really. Let me go to weekly here. So looking at the weekly chart will help us to get a better feel for this. Hang on. So we still have a bit of a upward bias here, but this is not, if you're listening to Tom Lee or some folks out there, maybe this is a big swing and we're going to get the move upward. That's not going to happen until we get the normalization of the yield curve. This chart here is totally dependent upon changes in the yield curve, and not just lower rates. That's not necessary. What is necessary is a more balanced curve here, because when we're looking at hang on, sorry. When we're looking at this chart, and you start to look at the constituents, and there's a ton of banks in here, regional, small banks. There's a lot of interest-sensitive stocks, and there's stocks that that have financing needs and all that. And when you see the 10-year printing up at around 440, you're just not getting a lot of opportunity, because most of these companies are also secondary companies that don't have the best credit ratings, so they have to borrow money at a little higher yield. But for the banking sector that's in here, this is important, because what you need is the yield curve to be much more balanced. You need a lower end on the yield curve. You need a 3% rate on the yield curve on the front end, 3.25. On the back end, it's okay to be 4.25, as long as the banks are able to borrow short and lend long. That puts not the odds, but that puts the balance sheet in a place to be able to perform much better, considering there's an economy and is strong and continuing what we've been seeing. Then that environment would help this stock a lot. Let's go over to just RUT. Let's go to the, let me make sure, see if I can get this to a monthly chart, because this is even more, I think, impactful. Not getting the algos to calculate here, but that's okay. We'll just look at the chart. But this here is, to me, is it a swing chart? Is it going to go up and goes ballistic? Maybe it's possible. I wouldn't rule it out. But I think until you get the yield curve in a much better place, you're not going to get there. I'm just trying to find. Let's go here. Let's bring up the yield curve real quick, because I'll show you something here. What I want to do is show you where we were at the beginning of the year. Let's go to the red line is going to be what the yield curve looked like when we were at the beginning of the year. And you can see rates were, 5 3/8 on the upside, and then, then they were much lower. We had that big inversion. If you recall, folks, and you've been around the channel for a while, I've been screaming that what we're going to end up is a flat yield curve where everything's 4.5%. Well, we're there right now. The ultimate goal for me and for the Russell to work. So every time I come up and somebody asks me about the Russell, you got to go here, because this is really the primary driver here. I'll just use a black line, but really what we need is a yield curve like where I'm drawing in this black line here. We need this to be right at the actually below here, probably down at around 3.25%, 3%. That's probably the current yield where the market should be. The Fed is holding rates up here, and what we're likely to see is this whole from roughly, this is let me clean this up, so I'll draw this in. This is the 1 year. Going back, this part of the yield curve is going to change. So we're going to see all of this come down. down like this, right? So I'm just drawing down where the arrows are going to be, and the very front end of the curve is going to be down here, and maybe I'm attempting to draw this. So this would be something like this. The bottoms of this would be the yield curve as we go forward, and these yields. This is still the scale here isn't good enough. I still think there's another half a point down where this range here, instead of in the fours, will be 375. These will need to be 3.25, and that will put the yield curve in a place. We'll go back now to the Russell. That would put the yield curve in place where a lot of these companies, whether they're banks or otherwise, could actually do well in the environment. You need to create a good quality environment for these stocks to actually thrive in. And the reason why you've got interest, because everybody's trying to front run, like they're all excited. I think we were able to print a moderate new high. This is a monthly chart I've got up there right now. Let me put that back up so you can see it. It's a monthly chart that's up there right now, and we're likely to see, this thing just continue to consolidate. I don't think we get this big swing, because until that interest rate stabilization, or normalization is a better word, until that happens, nothing's going to change from that standpoint. I'm just trying to, okay, here we go. Yeah, so go back to this yield curve. Until we get this more steepening yield curve, it's not going to be possible for the NASDAQ, the Russell, to get to this robust level. And I've got my AI hat on, and I believe AI is going to help a lot. I still think the mid-cap sector asset class has a much better profile. From a company standpoint, the internals and the constituent list in the mid-cap is a way better place to be playing. You can see it's outperforming a little bit. I think the mid-caps, it's a couple percent. They're up around 15% on the year, and where the small caps are around 12, I think, or maybe, yeah, they're a couple percent different. But I think longer term, that mid-cap asset class is going to do better than the Russell, and just because of the structure that we have in there. So, yeah, thank God those guys are gone. I'm sorry, guys. Of course, had no clue. I'm at an Airbnb in Phoenix, so actually way south. And so anyway, yeah. So those are the things that have to happen here for sure. Yeah, it's kind of interesting. I just brought up this Mara Holdings. Don't know these stocks, by the way, so I have no. It was interesting that the Michael Saylor stock would look like Bitcoin, because basically it is Bitcoin, right? So the mid caps not catch up. They're actually ahead of the Russell, but are they going to catch up to the S&P? And the NASDAQ, probably not, but they were likely to be a better performer. I'm doing a lot of research right now on my year-end outlook for 2025, and I guess the theme that I'm putting out there, and I've been telling you guys, is that this stuff, the AI, is going to drive a lot of efficiencies in the market. I think we're going to see good GDP growth. We'll see if the Trump administration can come through and push some of these positive business events. I think, obviously that's the Bitcoin, Trump showing up at the Bitcoin conference several months ago and putting out some good words, that's going to be something that that is definitely affecting the sentiment there. Oh, thanks. Yeah, it's tough getting older. It really is. Yeah, can I go over the inflation chart? Here's the deal, folks. We're going to spend about 8 or 9 more minutes. I'll spend an hour, then I've got to get on out of here. Okay, so let's go ahead and I think there's an inflation. This is a year over year. Let me turn the algos back on here. Should be this one. Yeah, there we go. Yeah, so this is something I've been talking about. Are these forecasts going to be right? I hate that. If you hit a space bar when you're on TradingView, I bumped my space bar, it knocked me off. So we'll go back. Yeah, so this is what I've been seeing for a while, is that the forecast is showing increase in CPI. This is year over year inflation. I'm not sure what the metric is here. We could go to CPI, but they all look pretty much the same. So I've looked at all of these, and what we're seeing here is that it's that wedge thing I was just talking to you folks about. This is really important to pay attention, because here is your wedge, as you've got this downward slope coming here, and we've got this. So we should see the inflation numbers start to seek into this region here as we come into the pattern. You can see that the overall pattern that's coming out of here is just on the red dots here are showing that we're going to come in. And this is, by the way, let me just draw this in. This is 26 right here. I'll make this so we at least get a line out of it. This is 26. So what it's saying is through 25, we're going to see increase in inflation. And it's not a big number, but it is from where we are now, around 2.5 back to 3, 2 to maybe as much as 4. So, this is my argument that I've been talking about for a while, is that it's possible that the Fed moved. I still think their move in September was political. I didn't see any reason, still don't see any reason for them. Maybe it's time to adjust rates. We'll see if they do anything in December or not. But this number that we're looking at here is what it's telling us, is that we're going to see this. So let's. One of the things I talk to you folks about all the time is what would cause that. So if we do the inverse fundamentals, if we're going to see inflation increase over the next, say, 3 quarters or so, maybe next year, what would that be? Could it be the Trump import? It could be that. Where we're going to see the tariffs start to add some in. But it'll be interesting to see, if we, how things balance out. If they actually increase oil supplies, who's actually playing, where's this inflation coming from, and all of that. But it does look like there's a bit of an inflationary period coming, and that the relative rates of inflation is going to be higher. So what does that mean? Does the Fed raise rates again? I don't think they do. I think they just normalize and let these markets figure out where they want to be. Not, the Fed's, I'll do air quotes here, and see where we at here. Yeah, about 4 more minutes. I'll come back. I'll do air quotes. The Fed's target of 2%. If you remember, if we go back, to really I'm going to just off memory, 2017 all the way into 2020, that was a 2% mandate. We couldn't, during the Trump administration, we couldn't hardly get it over 1.2 on the inflation numbers, right? So they kept going. We needed at 2%. And one of the things that, let me see if I can find a chart while we're talking. We'll close out here. There's no, this is some kind of random number. Maybe they've been throwing that number out for so long that it appears like it feels like there's some relevance to it. But let me just do something here. If I can find what I want, and I've talked to you folks about this before, and I'll put this chart up if I can find the right symbol here. Yeah, this is fine. I'll bring it up here in a second. And there's a Substack I did one night, and I'll show you this. This is pretty bizarre chart, and I always talk about this book that was around. Okay, yeah, this is good. I'm adjusting this. I'll bring it up on screen 1 second here. As soon as I get the scaling better. Okay, here we go. This will be the final thing I'll cover today. But yeah, so if you look at, this is the actual consumer price index. This is for all urban consumer. It doesn't matter. They all look similar. But this is something I covered in Substack one night, and I think this is an interesting thing to look at, because this was the 1940s, let's say World War II. This was the projection where I drew this blue line across. That was the projection for that period. If we get to 1972, I always talk about this. The Fed chair, Bill Martin, he left right here. And then you get Arthur Burns come in, and you get Nixon, you get the oil fiasco. Those of us older remember and being in lines waiting to get gas, odd and even days. It was crazy. But this one I want to show you. The next level was kind of was here, and then this was we got a blast up here. This is Jimmy Carter days, and then there's Reagan, and this angle here, roughly, we stayed within standard deviation or normal range here. Let me change colors here just because it'll be easier to see. So this next level here is this takes us all the way into 2020 over here. Okay, so the Fed. So what's been happening, everybody knows the depletion of, the debasing of the dollar is happening. This is where they're stealing the money. But look at the pandemic. Now we've got this let's get another color here that will make sense. Now we get this blast up, but now we have this new angle going here. This is your new 2%. This thing is going to the moon, okay? the purchasing power of the dollar is going to zero. It's almost there now. So while they're inflating, unless we see, there's a couple things that are going to happen to change this trajectory. And I actually am always an optimist, and I think there's a possibility of these things to occur, is that, well, if I'm right on the whole, I get my AI hat on, if I'm right about AI, efficiency, productivity, growth, those type of things, then we could actually see more of a deflationary pressure where things start to get cheaper. And, but if the Fed's hell-bent, number one, we need to just get rid of the Fed, right? Maybe just go on a Bitcoin standard. We don't need a gold standard. Maybe we go to Bitcoin. But the point is that what we get is we need this to flatten out and even come down to get the purchasing power back up. And the probabilities of that don't look very, very likely in the moment. But you can see, I'm going to back off a couple of these last arrows. You can see the angle that we're in now is, and the red lines here, I'm going to get rid of all this stuff. The dots here, the forecast is just to continue along this slope. So this was, when you look at the trick is when we go back over to these numbers, when you come over here, it looks very benign. Oh, look, it's under control. It expands. No, it's constantly, it's just the rate that things are changing. And my favorite book in the whole world is How to Lie Through Statistics. And it was a book written, I believe, the year I was born, in 1952. And the whole message there was, if you get the right kind of samplings, you can use like this 2% number, and everybody's like, oh, it's only 2%, that's okay. When you start to look at the actual index and you see the angles that are being created, because the numbers are getting bigger and bigger, and 2% is a bigger number. So you see those charts just continue to go vertical. And I think too many people spend too much time looking at this crud here, maybe that's the case. And boy, I'll tell you, I'm hoping you're wrong. Is WW3. Boy, they're sure trying to get it going, aren't they? Oh, crazy. I just hope they who knows? We'll talk about that maybe sometime. But anyway, a little bit over an hour, folks. Thanks for showing up. Sorry for all the distraction early. It's one of those things. So once again, just big advertisement, Black Friday sale, kendallreport.com/indicators. Use the code Kendall20, and it's about $100 off. You get them for, I think, $350-ish, something like that. And then we've got the symposium coming up. And if you're a new purchaser, you'll get, it's 4 hours of presentations, 2 hours of Q&A, and then there's a follow-up of Q&A for 2 hours. About, I think it's 7 or 10 days later, I'm gonna be announcing all this stuff here very soon. And then and this is targeted right now. The 2 days are going to be January 6th and 7th. So right after the first of the year, we'll start off the year. It's going to be focused on setting up trade setups, how to actually trigger exact trade setups. And also, just so you know, you're going to get 3 months of WaveTech along with this symposium, because I'm going to show you how to confirm your stock trades using WaveTech and the rule base out of our portfolio management tool. So like I said, I'll be getting all this stuff out here probably in the next several days, but the live code is there now, kendallreport.com/indicators. Get the 20% off. And you can also get next Friday, I don't know if they started it yet, but TradingView literally gives away, you can get a massive discount on a full year of TradingView. This is the time of year to step into that if you don't already have it. If you do have it, you will get there. But yeah, so yeah. Anyway, oh, the other thing that will happen with the new course, I'm going to put a private thread together on Discord so that we can all chat in there, because it's going to be pretty intense. Like I said, last year I did one almost. It was about a year ago right now, and I tried to do too much. I'm going to walk you through everything I know, and I did these 4-hour presentations. It was like a mind bender to stay alert that long, and it was just trying to cover too much. So I'm narrowing this in. Probably going to do multiple versions of this and do it segment by segment. I know we have something coming out next year. It's going to show you how to actually manage money, like a money manager type, and we'll be doing that as well. So anyway, thanks for hanging out. Sorry for all the noise at the beginning of the video, but we'll go from there. Folks, have a great weekend. I'm an Indiana alum, so go Indiana. We're going to beat Ohio State, and no one thinks that we can do it, so that means we will. So anyway, college football, love it. All right, see you folks. Take care. We'll see you soon. I'm going to try to next week. I'm going to be back in town. I've been out of town for like 6 days, so I'll be back next week, and I'll try to get on, and we'll do some of these live streams again. All right, have a great weekend. We'll talk to you soon. Don't forget the Substack as well. See you, folks.